If you've ever felt like you're just spinning your wheels with day trading, you're definitely not alone. But what if I told you there's a clear path to success, and it has nothing to do with luck or gut feelings? It's all about simple, powerful math. In this explainer, we're going to break down the exact math that separates the traders who win consistently from everyone else. So let's start with a pretty stark number. Why do something like 90% of traders fail? Well, it's a harsh statistic, but it holds a really crucial lesson. See, the vast majority of traders lose because they can't rewire their own brains. They bring their everyday intuition into a world where, frankly, it just doesn't work. And that's the core problem we're going to solve today. Most new traders get caught in what I like to call the spin cycle. It's this pattern of behavior that feels like the right thing to do, but it leads directly to blowing up your account. So let's break down exactly how this trap works, and more importantly, how you can sidestep it completely. Here's our game plan. First, we'll dive into that beginner's trap. Then we'll uncover the real math that actually powers profitable trading. After that, we'll look at the essential tools you're going to need in your toolkit. And finally, we'll lay out a blueprint for you to master your own system. Okay, so it usually starts with phase 1. You get an easy win, and your confidence shoots through the roof. This leads you right into phase 2. Your next trade goes against you, but instead of taking the small loss, you hold on, hoping, praying it'll turn around. And finally, phase 3. You keep repeating this behavior, but the trade just keeps going down, and that's when you get a catastrophic loss that can wipe out a huge chunk of your account. And this quote right here, it really gets to the heart of the problem. It's the great paradox of trading. Our natural human instinct to avoid loss at all costs, which is, a super useful trait in daily life, becomes our absolute worst enemy in the market. To succeed, you literally have to unlearn this very human response. So if our intuition is setting us up to fail, what can we actually rely on? Well, the answer is math. It's time to shift your entire focus away from that emotional need to be right on every single trade and move towards building a system that has a real, measurable, mathematical edge. Believe it or not, your entire trading career boils down to just 2 numbers. That's it. First, your average risk-to-reward ratio. That's just a fancy way of saying how much you win on your winning trades compared to how much you lose on your losing ones. And second, your win percentage. Pretty simple. How often are you right? Everything else is just noise. Now get ready for this, because this is the part that changes everything. You don't need to be right most of the time, not even close. With a system where your wins are 2.5 times bigger than your losses, you only need to win 35% of the time to be profitable. Let that sink in. You can be flat out wrong 65% of the time and still make money. And this chart just illustrates that point perfectly. Look at these numbers. Let's say you start with $500. You risk only $5 per trade, and you lose almost 2/3 of your trades. You could still end up with a 37% gain on your account over 100 trades. This is exactly why the math matters so much than being right on any single trade. So, how do we actually put this math into practice? Well, it all comes down to using the right tools. Tools that are specifically designed to help you manage your risk and let that mathematical edge of yours play out, trade after trade. The absolute bedrock of this entire approach is something called uniform risk. It just means that every single trade you take has the exact same small, predefined dollar risk. This is your shield. It's what contains your losses and prevents one bad trade from destroying all your progress. Think of it as the cost of doing business. It's what you pay for the opportunity to play the game and let your edge work. Now, you might be wondering, how can I take a decent-sized position with a small account? And that's where leverage comes in. As you can see on the left, without any leverage, a position might tie up almost $3,700 of your own capital. But look at the right. With 50x leverage, you can control that exact same position for just $78. And here's the most important part. Notice that your dollar risk and your potential profit are identical in both scenarios. But, and this is a huge but, leverage has to be used correctly. It's a tool for being capital efficient, not a lottery ticket for gambling. The absolute key is to always know your liquidation price. That's the point where the exchange will automatically close you out. Your stop loss must always be set to trigger before you hit that liquidation price. If it's not, you're just using too much leverage. End of story. Okay, so you have the math, and you have the tools. The final piece of this whole puzzle is building and mastering your own system. This is where you go from just understanding the theory to consistent, disciplined practice. And you need to remember this. You don't just stumble upon a perfect trading system. You don't find it, you build it, you test it, and you refine it over time using cold, hard data. It's an active process of discovery and improvement. And you know, the best part is you can build all of this confidence without risking a single dollar of real money. You can track theoretical trades in a simple spreadsheet. You can use awesome tools like TradingView's bar replay feature to practice your system on historical price action. By collecting all this data up front, you can start to see the patterns. What do your winners have in common? What about your losers? And look, it can be as simple as this: a basic sheet that tracks the date, what you traded, whether it was a win or a loss, and the P&L. Over time, this thing becomes an invaluable database of your own performance. It's your personal report card that tells you exactly where you stand. And once you have that data, you can visualize it to get some really powerful insights. For example, this chart shows that long wins make up 45% of the trades, while short losses are only 10%. This is the kind of data that lets you stop guessing and start making targeted improvements, like maybe focusing a bit more on your successful long strategies. So let's tie this all together. What is your path forward? First, you've got to let go of that emotional need to be right all the time and just embrace the game of probabilities. Second, focus obsessively on your two key stats: risk to reward and win rate. Third, use your tools properly to maintain that uniform risk on every trade. And finally, build your system through relentless testing and data analysis. And that leaves us with one final, crucial question for you to think about. As you move forward, I want you to ask yourself with every single decision you make, is this trade based on a feeling, on hope, on a fear of being wrong? Or is it based on a tested system with a clear mathematical edge? The answer to that question will define your entire journey as a trader.